Hello, I'm Kamal Santamaria. This is Counting the Cost on Al Jazeera, your weekly look at the world of business and economics. This week, Germany. With growth slowing and exports drying up, is Europe's perennial powerhouse in trouble? We explore what could be a turning point in the stimulus versus austerity debate in Europe. Also this week, back in power, the Brazilian people give Lula's economic revolution another chance in the form of his successor, Dilma Rousseff. Why did they vote her back in again? What does she have to do to get the most out of Brazil's economy? And the new president of Afghanistan takes his first overseas trip, not to the US, which has spent 13 years in his country. We'll tell you where Ashraf Ghani went hunting for security and investment. You know, almost 25 years now since the fall of the Berlin Wall, and really there is no disputing Germany is the superpower of Europe. Which is even more impressive when you consider the $2.3 trillion cost of absorbing East Germany, plus the rising costs of unemployment, growth and wages. The irony is Germany's willing to plough 100 billion euros a year into its former East, but won't allow the rest of Europe to spend their way out of recession. We wondered, though, even could that be about to change? See, Germany's economy contracted in the second quarter of this year by 0.2%. Now, even though it's widely believed Germany will avoid recession, that is obviously not good news. The reason behind the contraction? Well, it's the usual stuff, the stagnating Eurozone, the geopolitical tensions in Ukraine and the Middle East. It's forcing Berlin, though, to slash its growth target for this year and next. It's now expecting 1.2% instead of the previously forecast 1.8%. So it's all a little contradictory, you know. Berlin doesn't want to spend its way out of trouble. It doesn't favour the ECB and the IMF's wishes for quantitative easing and spending to revive growth. But at home it is spending billions to improve life in the former East Germany, while infrastructure in the West is falling apart. Nick Spicer has more on all of that before our discussion on the immediate future of Germany's economy.
In the land of the Autobahn, there's a bumpy ride ahead. Just ask one of the truckers who crisscross Europe year-round. This one says Germany's roads are full of potholes and half-finished repairs.
The
roads in France are so smooth, you can put a cup of coffee on the dashboard while you're driving and it will still be there in 100 kilometers. The roads are just perfect.
In the capital Berlin, 1 in 5 bridges needs fixing. The main train station is only 12 years old, but it needs work too. High-speed trains must slow down on its elevated track because support beams have loose screws. But if you listen to the government talk, it's all under control, and there's no need to go into deficit to keep things going.
We'll be investing an additional $6.5 billion in roads, rail tracks and waterways this legislative period. Of that, $1.3 billion will be spent this coming year.
But that's not enough. The German government may see its budget as both prudent and as an example to its neighbors running deficits, but the International Monetary Fund and the European Central Bank both say Germany should be spending more, and especially on infrastructure. They say that could help kickstart European economies in the doldrums. Even advisors counseling the government say it should be doing more, if only for this country's sake.
This advisor on investment says Germany is not doing as well economically as many think.
A gap in transport infrastructure of about 10 billion or 0.4% of GDP every year, what it needs additionally to what it does at the moment, simply to keep the value of the infrastructure constant. So you can see the big gaps, and they're in particular in the area of public investment.
Germany has another challenge. It has decided to abandon nuclear energy and switch to 80% renewable energy by 2050. But it lacks the power grids to make that work. The German government hopes to get private investors to help with infrastructure, but most are cautious. They see no quick profit in work that will last for decades.
Now to our guest, and you will have spotted him in Nick Spicer's report. He is the president of the internationally renowned German Institute for Economic Research, DIW Berlin. It is Marcel Fratzscher joining us this week from Berlin, and we thank you for your time, Marcel. Will Germany avoid recession? Because we've had this contraction in the quarter, but is there enough life in the economy to avoid recession?
The third quarter in Germany could very well be negative, which technically speaking, together with a negative second quarter, would put Germany's economy into recession. But we should not overinterpret those numbers. Germany is on a good path to solid growth this year and next year of a bit above 1%. So recession is not really a very high likelihood, at least for the German economy.
Okay, but is Germany spending enough to keep things going, to shore up its economy, especially given that, this really wasn't the path, spending really wasn't the path that Germany wanted to go down?
Germany's economic growth has been declining very rapidly this year. The problem in Germany is not consumption spending. Consumption spending has been very solid in Germany. Wage growth has been above 3%, will likely to be so also next year. The big problem in Germany are exports and domestic investment. Germany realizes it no longer can rely on strong export growth to generate enough income growth in Germany. So it needs a rebalancing away from exports, more towards domestic investment. And here is the main problem, the main difficulty in Germany, and that's what the German government needs to tackle.
Okay, so if exports are the big concern, can you tell us then what has it that's been hitting exports, to sort of expand and extrapolate on that for us?
Germany's exports have really been the backbone of the German growth model for the last 10-15 years. Now, this is declining for a number of reasons, the most important one being Europe. Europe is still in a very deep crisis, economic crisis, Italy being in a third recession in 6 years, France being very weak. So German exports to the neighborhood is declining, but also the Ukraine-Russia conflict, the conflict in the Middle East is weighing on German exports. German exports to Russia have been declining rapidly. And also emerging markets are a very important factor for German export growth. And we see in China, we see in India, we see in a lot of emerging markets growth being revised downwards, which means less export growth, less economic growth for Germany.
So what's going on there, Marcel? All this economic pressure on Germany, and yet it is still opposed to the idea of buying up bonds the way the ECB would like it to. It is still opposed to the idea of stimulus, and it wants the rest of the Eurozone to stay with austerity. Explain to us this situation, because on the face of it, it doesn't really make sense. You think Germany would need to start spending more?
The prevalent view in Germany is we need to do structural reforms all over Europe to get stronger economic growth in the medium term. The view in Germany is this has to be the #1 priority. Of course, you can have addition to that expansionary monetary and fiscal policy, but without structural reforms, we won't get out of the crisis in Europe and we won't get a recovery. I think there is a lot of truth to that. But of course, there is also a concern in Germany that the ECB monetary policy may transfer risks, may transfer cost from other European countries onto the German taxpayer. I think that view is wrong, but still that is the fear that you have in Germany, so there is a strong opposition to more expansionary monetary policy by the ECB.
You don't see that policy of the Germans changing anytime soon?
I see at the moment no change to that position in Germany on monetary policy by the ECB. I think it will take a deeper crisis, a further slowdown in economic growth, also further deflationary pressure in the euro area. I think only if it deteriorates further is there a willingness in Germany, also in the German government, to make a complete rethink in terms of economic policy and also for the European Central Bank to be more expansionary. So at the moment, I don't see the chances very high that the German government will reverse course on that.
Okay, I wonder, Marcel, and maybe this is a bit of speculation here which you can either prove or disprove, but maybe they've looked at how quantitative easing has gone in the United States, given that the Fed is now reducing that. And even though it has provided a bump there, Germany's looked at it and thought, you know what, maybe the long-term success of that, maybe we have to query that. Maybe this has contributed to things like rising inequality, and it isn't really what we wanted in the end.
Well, expansionary monetary policy in the United States and in the UK has been successful in my view. I mean, those two economies are recovering. They're doing fairly well, at least compared to the euro area. So the realization in Germany should be that expansionary monetary policy, non-standard measures, purchase of private and public debt can work. But of course, it has side effects. It has risk. It risks creating bubbles in financial markets, a misallocation. It risks creating zombie banks. We have seen after the stress test that basically none of the banks in the euro area will be affected very strongly. But we have to weigh that against the advantages. And with the deflationary pressure being so severe at the moment, the ECB cannot stand still and simply claim it cannot do anything. The ECB has to act to be credible, to signal we will do whatever it takes to also deal with the deflationary risk that we see at the moment. So clearly, looking at the United States and the UK shows that expansionary monetary policy and the purchase of sovereign debt can, under certain circumstances, indeed be successful.
That is Marcel Fratscher joining us from Berlin this week. Thank you for that, Marcel. And still ahead on Counting the Cost, India's attempt to evict 90,000 slum dwellers. Who wants them moved and why? Plus the politics to keep them there. Right now, though, Brazil and the re-election of Dilma Rousseff. It was by the tightest of margins, which maybe isn't surprising considering the corruption scandals, the economy in recession, and a currency worth a third less than when she came to power. Our Latin America editor Lucia Newman now with a look at the ongoing challenges for President Rousseff.
In the Brazilian capital, a small group of supporters of President Dilma Rousseff celebrate her re-election victory, while others try to ignore them. The tightest election in Brazilian history split the country in half. Trying to put a positive spin on the outcome, President Rousseff has vowed to implement reforms, as she reached out to nearly half the country that voted against her.
I am sincerely open for a wide dialogue with all sectors to find quicker solutions to our problems.
At the Bovespa Sao Paulo Stock Exchange, a pessimistic response, a steep 5% fall. Shares of the state oil company Petrobras dropped 13%. And that's not all. Brazil's currency, the real, has dropped 3% to a 6-year low. All of this a clear indication that the president's promises of reform do not suffice. While the poor and lower middle class still believe in Rousseff, the business community wants clear signals that the president will ease up on what it sees as excessive government intervention and insufficient structural reforms. These include desperately needed investment in infrastructure and education to improve an underqualified workforce.
The ability of Brazil's business sector to grow, innovate, and invest is proven. The problem is that the state political structure is holding back the country.
Rousseff's re-election generated a big sigh of relief among her left-wing neighbors, from Cuba to Venezuela to Argentina, Uruguay, and Bolivia, all of whom now expect to maintain the region's left-leaning balance of power with Brazil's help. But at home, the president of Latin America's largest nation will have to move quickly to restore confidence, proving she means what she says when she claims that close outcomes sometimes trigger faster change than ample victories.
Well, let's look closer at some of those challenges. In London for us is Carlos Caicedo, who is the Senior Principal Analyst for Latin America at IHS Country Risk. Carlos, the electorate decided to go with Dilma Rousseff again. How much of that was a vote of confidence in her, or just a feeling that it was better sticking with what they knew, perhaps?
I think it is more a reflection of how the country is gradually polarizing between two different sets of voters. One is the upper middle class and the economic elite, and the other one is the poor and the lower middle class. If you look at the geographical pattern of the vote, you will see how she won by a large majority in the northeast, which is the poorest region, but she lost in Sao Paulo, which have 14 million inhabitants and represent a large part of the GDP. The Congress is going to be more fractured, and you're going to have, instead of 22 parties, you're going to have 28 parties. You're going to need somebody like Lula to actually get there, fix coalition in order to move forward with policy making. So it's a big challenge. It's a very difficult environment for Dilma Rousseff, but we're still waiting for who is going to be her finance minister and how brave she's going to be in terms of implementing austerity measures, because that will give a measure whether she is willing to bite the bullet and actually tackle the macroeconomic imbalances that have been affecting Brazil over the last 2 or 3 years.
It's funny, Carlos, you made mention of Lula there, former President Lula da Silva. How long are we going to still be talking about him? Dilma Rousseff's had one term in power already. She's been re-elected for another one. And yet Lula still casts such a shadow over Brazilian politics.
Well, that's exactly the big challenge for Dilma Rousseff. Lula remains the most popular politician possibly ever in Brazil. And he has, despite his age, there is indication that he has aspiration to run again in 2018. If that's the case, and he really intends to run again, so we're going to carry on hearing about Lula for the next 4 years. But the other thing is, you know, and the people know that Dilma Rousseff is a technocrat. She's not very efficient at dealing with politicians, and she had had problems connecting with the business sector. And on those two fronts, the bridge to reach the private sector and the bridge to fix coalition in Congress is no doubt President Lula. So she's going to need him. She's her own woman for sure, but unfortunately or fortunately for her, Lula would be a key figure in the next 4 years for right or the wrong reason, and especially if he wants to run again in 2018.
Just finally, Carlos, you've described to us some of the things that you think need to change in Brazil. Do you see signs that this will actually happen? Were there signs towards the end of Dilma Rousseff's last term? Were there signs during her campaign even that she was going to take heed of these concerns and actually, attack things a bit differently?
I think there are some signals, initial signal that she intends to correct some of the policies that were implemented under her four years' time. The problem is there is some limitation there. For example, she indeed needs to control inflation, that's for sure. And also she needs to cut public expenditure, especially on the social front. So there is a set of challenges there. At the moment, the signals are positive that she intends to tackle this head on, but obviously we have to see what the measures are going to be in practice. They are talking about a very, very tough fiscal approach for the next, at least for 2015, whether she translate into a proper austerity measures is something that we'll still need to see once we see the specific and concrete policies to be implemented and announced.
Carlos Caicedo talking Brazil with us this week. Thank you for that, Carlos.
You're welcome.
Now, as a World Bank economist, Ashraf Ghani travelled to China numerous times. But his latest visit took on a new significance. It was his first foreign trip as the president of Afghanistan. Because as the US draws down its presence, Ghani is looking for closer security and investment ties. From Kabul, Jennifer Glass looks at China's investment in Afghanistan.
China is Afghanistan's biggest business investor, thanks to a $3 billion deal for the rights to this copper-rich area outside Kabul. But there are no Chinese miners here. The promised roads and railways haven't been started. Security concerns have stalled the project. In China, Afghan President Ashraf Ghani is hoping to revive this deal and Chinese investment in his country's minerals, worth an estimated $1 trillion. Hasibullah Rahmani is a Kabul businessman who says those minerals mean the two countries need each other. China wants raw materials, and Afghanistan wants Chinese products. He travels to China once a year to buy goods that are shipped through neighboring Pakistan. He hopes someday they'll arrive by truck.
We can make a make a route from Afghanistan to direct to China. This is the first we need, and we hope in the future.
But the border is in a remote corner of Afghanistan, and it could be 10 years or more before any road is built.
This used to be Kabul's version of Chinatown, with dozens of Chinese businessmen and workers here. They left last year because of uncertainty over the elections. President Ghani isn't just trying to revive the two countries' business relationship. He's also looking to the Chinese for help with security.
That's because the Chinese government has a strong relationship with Pakistan.
We are seeking the Chinese support to use its leverage over Pakistan to convince Pakistanis that the stability in Afghanistan is in the interest of all countries in the region.
Afghans are hoping their new president will deliver security and prosperity. They will be watching this visit to their Asian neighbor to get a sense of his foreign policy and whether it can bring them the changes they want.
Well, here's the opinion now of someone whose job it was to look at relations with Afghanistan. David Sidney, a former US Deputy Assistant Secretary of Defense for Afghanistan and Pakistan, who I spoke to earlier in the week on Al Jazeera's NewsHour.
You can't miss the fact that this is when U.S. and British forces are pulling down their flags in Helmand. The U.S. is committed to cutting down to less than 10,000 troops by the end of this year. At the same time, the Taliban have mounted a fairly sharp offensive in recent months. So President Ghani needs help, and he's looking to someplace closer than the United States for that kind of help, both economically and on the security side.
What do you think China can offer?
Well, first of all, China can offer trade and investment. China not only needs the minerals that were mentioned in your report, but China also needs an outlet to the West. President Xi Jinping, China's new president, has announced a westward policy, reaching out to the West through Central Asia, through Pakistan, and through Afghanistan, towards Iran, the Middle East, and Europe. And Afghanistan hopes to be able to profit from that kind of transit trade, as well as China's burgeoning need for minerals, such as the copper mine you mentioned, oil, gas, steel, and other areas that Afghanistan has the potential to be a major supplier in the future.
But it's just got to be so careful, doesn't it, Afghanistan? The moment you get into this territory of minerals, particularly oil and gas, it becomes a competition. You invite China in, you've got other neighbours, India and Pakistan, you've got US interests, and they can all just be fighting over it in the end.
Well, they could be, but the problem for Afghanistan right now is getting anybody to actually come and commit real people, real dollars to these kind of resources. As your report showed, China signed a deal for a copper mine, but nothing has really happened there, partly because of security, partly also because of the actual difficulty of doing things like building railroads and roads in Afghanistan. So the competition actually is something that the Afghans would love to see. They're looking for more of it. Competition between China and India, between China and the U.S. If that can happen, the Afghans feel that they can profit.
Finally this week, the slums of Mumbai. Or is it Mumbai Airport? Oddly, there is a blurring of the two simply because they're so close to each other. That's created security concerns, so apparently the slums have to go. Faiz Jamil takes up the story now.
90,000 people live here. Expansion of the airport has brought it closer to the sprawling slum. Officials now say this poses a growing security risk. Those living here say they're not a security threat, although some agree that the slum is a place where anything can happen.
In this day and age, you can't predict anything, and everyone here is poor. There are people in this community who could be tempted easily to do anything bad for money or food.
The residents represent a large voting bloc, and that is why politicians have not tried to make them move out in the past. Aviation security experts say that an increase in terror threats over the years has made this slum an increased risk.
The way we had this Mumbai attack a few years back, we don't know from where the terror is coming.
Even unintentional incidents such as fireworks during festivals going astray make the area too close for comfort. And Mumbai's passenger traffic, projected to more than triple to about 100 million a year in the next 16 years, make the slum an even larger concern.
As you can see, this slum comes right up to the runway fence. It's so close that the government wants the slums around the airport cleared and people relocated, something that the people who live in them say they'll fight.
The concern is
activists and residents are willing to move out of the filthy conditions of the slums, but they don't want to shift into apartments like these on the other side of the city.
We helped in building this airport and it's built on our village land. The government didn't have the land, so they took ours. So why shouldn't we be allowed to continue living here?
Whatever is decided, the focus for now is on these people and convincing them to move.
And that's our show for this week, but there's more for you online at aljazeera.com/programs. The Counting the Cost page is there with individual reports and links, entire episodes for you to catch up on. You can join in that as well by tweeting either me at Kamal AJE, our business editor at Abid Oliver Ali, and do use the hashtag Counting the Cost as well. But that is it for this edition of Counting the Cost. I'm Kamal Santa Maria from the whole team. Thanks for joining us. The news on Al Jazeera is next.